Before we start chapter 4, let's just do a little review of what we did in chapter 3. And in 3, we were introduced to the journal. A journal is called the book of original entry. And every financial occurrence in the business is listed in the journal. And they're listed in what order? Chronological. Okay, by date. We're going to record revenue and expenses when they are incurred. That means when they happen, whether we've received the money for it or not. And we have a place to put our debit and our credit and a description in the journal. Be as clear as you can with your descriptions. I always think if there's an auditor looking over your shoulder a year from now, could you explain that journal entry? The ones that I don't think we had a very clear description were probably the wrong entries. And if we're paying a personal phone bill for the owner, that's okay. But there's a check that's written to the phone company for a certain amount. And I would just make sure that my description said we paid the phone bill for the owner. That's why we wrote the check. And if that person sent you an email or just put a note on your desk, I'd keep that. You want to make sure that you have source documents to back up everything that you're doing. We've talked about how easy it is for people to embezzle funds from a business. There are some people that just write checks to themselves. It takes a little while for the owner to find out about it, but by that time, thousands of dollars could be stolen from a business. And there are people that I know that have spent time in prison because of embezzlement. It's too tempting for some people. I've worked as a teller for years before I went back to school, and people would say, isn't that just tempting to be handling all that money? And I never looked at it as really cash that was available to me. I was just processing transactions. But for some people, I think it might be very tempting to handle all of that cash. You cannot track cash. If we found $20 in here, nobody in here could say that that's their $20 because your name is not on it, and we're not going to look at the serial numbers on that $20 bill that we have in our pocket. So cash is very hard to track. We'll talk a little bit more about cash when we do bank statements and reconciling our bank statement, but there are just situation upon situation where someone is just tempted to take that money. Sometimes it's two people working together, and if you're both dishonest, then it takes a little longer for that to be caught, because in a bank, two people have to open the night deposit, two people have to open the drop box. If you the night deposit, sometimes you have a key to put the big bag in if you're making a huge deposit, but sometimes you can just put your envelope into the machine and someone has to process that. So if there are two people that are doing the checks and balances, but they're both dishonest, it's still going to happen where someone is embezzling funds. So our book of original entry keeps track of everything that has happened. We have to have a source document, whether that's a bill, whether it's a check, whether it's a deposit slip. We have to have something to back it up. It could even be a memo from the owner. What part of that transaction goes first?
The debit.
The debit. And then what part goes second?
Credit.
The credit. And the credit is indented about a ½ inch. Some of you, as I looked at chapter 3, I haven't graded chapter 3 yet, the workbook pages, but you didn't indent the credit, and that's going to be points off of your homework. The credit is indented. Now, not all accounting books show the credit indented, but I like it indented. You can look at it and know exactly what your debit is and exactly what your credit is. but the debit always goes first, and then your credit, and then a good description. Our book shows it stair-stepped with the description, just like this for you all to look at it. But the description can go back over to the left margin. It does not have to be appendix. From there, from the journal, we did something new last Thursday. What was that? The posting. The most time-consuming thing that you'll do in accounting. We carried the information from the journal and put it into the ledger. There are how many steps? 5. We're taking, and I like to just go across the journal or the ledger as you're taking it from the journal. You're going across the journal too, but just go across the ledger. The first thing is
record the date.
The date, right? The second thing
Is the PR.
the PR, and in the ledger, it's the page that it's coming from. We're using a general journal, so it was GJ
On whatever page it is.
1, and usually it's 1, but sometimes when it's one of the comprehensive problems, I might not start with page 1, so it could be page 3, depending on what month it is. So it's GJ and then the page number, and then what's the third thing?
Debit or the calculate the new balance.
Have to do something before we calculate. We have to put the amount in, don't we, in the
Yeah.
first 2 columns. Okay, that's the third step. The fourth step is where we calculate the new balance, and it's a running balance. So if we recorded a debit as 10,000, and then the next time we made a posting entry, and we recorded a debit of 3,000, what's the balance? 13,000, and it stays on the debit side. If you use a register in your checkbook, and not very many people write checks anymore, but if you use your debit card and still write things in your register, then you'll know it runs just like that. It keeps a running total of each one of those accounts. Cash was our first one. And why is cash first?
Because it's used in like more than 85% of all the payments.
All transactions.
But how are accounts listed
By numerical
on
order,
the
and it's,
balance?
and it's
Not
number one.
numeric.
By the chart of account.
Chart of account, first one.
It comes from the chart of accounts,
Oh.
but why is cash always the first one?
Because assets comes first and it's like most like.
It was the first transaction.
Okay, that's the key word, liquid. Assets are listed by order of liquidity. Which ones can we turn to fast quickly? Remember the store I worked in, Mitchell Sales? And on payday, he had to go and collect accounts receivable. He had to turn those promises for our customers to pay me. So it's cash, it's usually petty cash next, which we haven't had yet. Accounts receivable, and then maybe your supplies. Things that you could get rid of quickly if we needed cash. And cash is the first thing. We could go to the bank and withdraw the cash. So cash is, assets are listed by order of liquidity, and cash is usually the first one with the account numbers that start with what?
1.
1. Okay, could be 1,000, could be 100. All right, from there, after we posted, then we're going to take the balances in that ledger and prepare what type of statement?
Trial balance.
The trial balance.
Trial balance.
It's a list of everything. It just tells us our debits and credits equal, and then we can prepare the financial statements in the order of, what's first?
Income statement.
Income statement,
Statement of
Statement of
statement of owner's equity,
Balance sheet.
balance sheet. Good. You all got those correct on the test. You did good on the test. I was very happy. Haven't graded my hybrid students test yet, so we'll see how they did. When they watched the video for the test review, they said, oh, your face-to-face class seemed more secure than we did. And I thought, I don't know, you all asked a few questions when we did the review, but I thought that was funny that they said that. But we'll see how they did. I scared the one guy away in that class.
Who you scared one is?
So
So you're even.
I've got the girls now in there. All right, so we're going to prepare the financial statements from there. And then we're ready to start over again with the next month. In chapter 4, we have a new statement that we're going to use. It's a tool, it's a big tool, and it is called, what? The worksheet. It's really my favorite thing to do. It is just a working tool that will help you put everything together before we put things on the official financial statement.